The journey to becoming a consistently profitable trader is less about finding a secret indicator and more about mastering yourself. It's a profound psychological odyssey, one that almost every trader goes through, whether they realize it or not. Today, we're going to break down this journey into 5 distinct stages, from wide-eyed beginner to seasoned pro, and explore the emotions, pitfalls, and breakthroughs that define each one. Understanding these stages won't just help you navigate your own path. It might just be the key to unlocking your long-term success in the markets. Let's dive in. Our first stage is unconscious incompetence. Imagine someone who's just discovered trading. They might think, how hard can it be? You just buy low and sell high, right? This is the stage of blissful ignorance. New traders here often have a simplistic view of the markets. They're unaware of how much they don't know, and critically, they underestimate the inherent difficulty of consistent profitability. Sometimes they even experience what's called beginner's luck, where their initial, often random trades somehow turn a profit. While exciting, this is a dangerous trap. This early unearned success can inflate their ego, making them feel incredibly smart and leading them to ignore fundamental risk management. Emotions at this point are usually pure optimism, excitement, thrill, and even euphoria. They're riding a dopamine high, fueling their belief that trading is easy money, and they become resistant to genuine learning because, in their minds, they're already winning. They simply don't know what they don't know, and that lack of awareness is a major barrier to real progress. Next, the honeymoon phase ends, and traders enter conscious incompetence. This is often the most challenging, prolonged, and frustrating stage. The market, with its brutal efficiency, begins to teach them painful lessons. Losses mount, and the reality that they don't know how to consistently make money hits hard. They realize they're incompetent, and it's a very conscious, often painful realization. This triggers a frantic period of searching. They might buy every trading system, devour countless books, watch endless YouTube videos, and jump from one strategy to another daily or weekly. They're desperate to find that holy grail system that will magically fix everything. Each new method offers a fleeting sense of hope, quickly followed by renewed disappointment as consistency remains elusive. This is often where traders experience what's commonly known as the valley of despair. Emotions spiral downward. You'll see anxiety, denial, fear, desperation, panic, and eventually despondency and even depression. Traders hold on to losing positions, hoping they'll turn around, engaging in denial, telling themselves they're long-term investors now. This stage is marked by what we call informed pessimism. They now know enough to realize how much they don't know, and how hard it truly is. Most traders never make it past this stage, simply quit, losing all their capital and confidence. The core problem here isn't a lack of information, but a lack of understanding about probabilities, discipline, and the critical need for a consistent, personalized approach. They're stuck searching for external solutions when the real battle is internal. However, for those who persevere, a profound shift occurs, leading to the Eureka Moment. This isn't necessarily a single event, but a crucial cognitive and emotional breakthrough. Traders in this stage finally internalize the truth. They cannot predict the market, short-term movements with certainty. This is a massive psychological hurdle to overcome. They stop chasing news, guru predictions, or external secrets. Instead, they realize that success comes from focusing on what they can control: their own behavior, their system, and their risk. They pivot from prediction to probability. They learn to develop their own personal trading system, incorporating strict risk management. Losing trades are accepted as a normal statistical part of the process, not personal failures. They start focusing on the long term, evaluating their performance over a series of trades, not just individual wins or losses. This is a moment of profound acceptance, where the intense emotional distress from individual losses begins to fade. The ego's need to be right on every trade diminishes. This acceptance of uncertainty is paradoxically what allows them to begin consistently executing a disciplined plan. The point where trading transforms from speculative gambling into a probability-based business. Mark Douglas, a renowned trading psychologist, emphasizes this crucial shift in mindset: accepting risk, understanding probabilities, and detaching from the outcome of any single trade. Having had their Eureka moment, traders then move into conscious competence. They are now consistently applying their well-defined trading system. They're cutting losses swiftly and letting profitable trades run, demonstrating discipline and patience. They use tools like trade journals and grading systems to objectively evaluate their setups and performance. While they are competent and often profitable, the execution still requires considerable concentration and conscious effort. It's not yet automatic. They have to actively fight against their old impulses and continuously reinforce their new, disciplined habits. Emotions are managed, not eliminated. There's a growing sense of informed optimism, a genuine faith in their abilities, and relief as consistent results finally start to appear. This stage is about the continuous, deliberate practice of discipline. It's often the longest and most challenging stage in terms of sheer mental effort because they are consciously overriding years of ingrained emotional responses. This is where the commitment to process-oriented trading truly solidifies. They're building the neural pathways for consistent, disciplined behavior, turning theoretical knowledge into consistent action. Brett Steenbarger, another prominent trading psychologist, talks about the importance of structured practice and deliberate effort to develop the necessary skills and habits in this phase. Finally, the pinnacle, unconscious competence. This is the stage of mastery. Trading becomes seemingly effortless, intuitive, and consistently profitable. The complex skills, disciplined behaviors, and emotional mastery have become second nature. They execute their trades with fluidity, often without requiring intense conscious focus, freeing up mental resources for higher-level thinking and adaptability. Emotions are not suppressed, but they are understood and managed, allowing decisions to remain rational and objective, even under intense market pressure. Traders at this level can adapt seamlessly to changing market conditions, build upon their unique strengths, and continuously refine their approach. They often describe being in the zone where their actions align perfectly with market opportunities. This stage represents true achievement, sustained confidence, and deep psychological well-being. It's not about never having a losing trade or feeling an emotion, but about processing losses and emotions constructively, consistently returning to their disciplined framework. The effortlessness comes from ingrained habits and profound self-awareness where the right responses are automatic. This is where trading transcends a mere skill and becomes an art form, a fluid dance with the markets, sustained by unwavering self-mastery. In summary, the journey through these 5 stages, from blissful ignorance to intuitive mastery, is a testament to the fact that trading is ultimately a journey of self-discovery and self-mastery. Each stage presents unique psychological battles and learning opportunities. Recognizing where you are, understanding the challenges ahead, proactively implementing strategies for psychological resilience and disciplined execution are paramount. The market will always be unpredictable, but by mastering your own mind, you gain the clarity, consistency, and confidence to navigate its complexities and truly thrive. It's an ongoing process of learning, adapting, and growing, both as a trader and as an individual. Keep learning, stay disciplined, and never stop striving for that effortless competence.